All right, good morning, everyone. Hope everyone had a good and relaxing weekend. Time to get back to it here. Big move out of the open, guys. Kind of a lot of news over the weekend with tariffs. Excuse me, tariffs with Canada, continued economic sanctions, etc. in Iran. Busy weekend. So the markets actually surprisingly didn't react much overnight. Seemed they were waiting for the equities, U.S. equities market and options market to weigh in, and they've started to weigh in. We've got a really interesting candlestick pattern, a little W pattern going on down here on the 1 minute. Um, Man, excuse me, guys. Before we do that, we want to take a look at the big picture. So again, it was all this candle, right? We were kind of hovering around really about where this candle opened. It was basically a doji at the half hour mark. And then, of course, we opened up pretty strongly down. We're not in an area of a lot of prior consolidation or prior noise on the chart. So that I wouldn't say that this is a key level, although anytime we're near, one of the roundies, one of the hundreds or thousands, it's something we're going to pay attention to. So really, guys, it is a weighted out kind of Monday. We're always patient on Mondays, but especially so this Monday. Anytime we get sort of new macro news, right? So anything with Iran at this point is really, we've heard whatever stage of the war it is, it's over, it's just starting, it's escalating, it's de-escalating, there's peace. We've heard it all. So the market really hasn't reacted much to that. Going into Friday and then today, there's also been some news with the U.S. Treasury buying back bonds, looking to drive long-term yields lower. There's a lot going on, and it's all direct economic news as opposed to war news, right? Tariffs with Canada and the U.S. bond market and the Treasury kind of manipulating there. So it's just a big morning, right? And that should always, I'll be honest, guys, I know the kind of mistakes that I can make. I did not open my charts. Or I closed my charts a little before the open, and I did not reopen those charts until about 15 minutes ago, because I knew that I would talk myself into something at the open. And sure, on a day like today, you can get a sloppy entry on a short if you're scalping and make some money. But you still, again, guys, the whole reason we're here, the whole thing we're doing is structure. Right, and structuring things around our trading, in this case the stack trade system or structure. So yeah, so as tempting as it can be to really jump in. Let's see, what do we got here? Did I see ES? Okay, potential S3 short in ES. I'm not sure I'm eager to take a trade this early in the morning, considering again what we just went over, all the major news events that we've heard in the past really 24 hours, really 12 hours. So not necessarily looking for an S3 here. I think where the setup could be, guys, is at the top of next hour, right? If we continue to move a little lower, we could see some S4 break and extends off our hourly mids, or even some S3s if they're a little lower in the pattern as well. But again, where we're at now, there is there shouldn't be any longs. Again, we can occasionally make exceptions for no longs below the daily mid or no shorts above. But in this case, it's the price action since the open and the fact that we're so far below the mid. It would only be shorts for me at least until lunch. So again, hope everyone had a good and relaxing weekend. I think this is the longest from. So my wife and I had it was first anniversary trip, and so we went down to we live in the greater St. Louis area, so we drove down to Memphis. Never been there before. Stayed in one of their really, really nice hotels downtown. It was a blast. Really enjoyed it. But Thursday I closed the charts. We left Thursday night. I didn't reopen the charts until about 7 o'clock last night. I think that's the longest I've gone without opening a trading program in a year since I got married. So yeah, so it's it was a nice relaxing weekend. Highly recommend, guys. Once you start doing well in trading, right, and to reap what you sow a little bit, try to take a nice, like, relaxing trip. I don't care if it's an hour away or the other side of the world, at least a couple times a year, and get away from the charts. Early on in your career, you want to grind a little, do a little extra chart reading at night before you go to bed. Hey, that's great. But once you become a little more successful, it's really important to monitor kind of your day to day mental health, um, and understand when burnout is just it's so prevalent in this industry. Traders, teachers of trading, people on the tech side, there is so much burnout because there's so much at stake. So make sure, one of the toughest parts in your career, guys, is not exactly when you're consistently losing. It's actually when you first begin to consistently win, because you're so close to your struggles, and it's so easy to think that things will go back to that with a one, or two or three trade losing streak. So that, and that's when you're most prone to actually abandon some of the trade management, risk management tools that got you out of that hole, and get right back in it. So just monitor that as you're getting successful in trading. Rant over. Yeah. So I think, guys, it's going to be an after 10 Central kind of day. I mean, we'll see what develops here. I mean, we're going to take this next leg down. This is what I'm interested in right now. So, again, are we going to make a lower low? Guys, with trends, sometimes, hold on, let me get my drawing tools. Come on, there we go. Again, a trend is no more than lower lows and lower highs. And so we're a little more consolidating here. So do we crack down here and continue the pattern, or do we sort of complete the W, in this case, sort of a double W, as it were, and break to the upside? So we've got our range. We've got the first place since the New York Open that price has taken more than a few minutes to test and to consolidate. I'm going to do some formal videos on this at some point in the future, guys, probably a month or two down the line. But it's sort of loosely what I call zone theory, which, and this can be used in any time frame, any instrument, etc. But it's just when price goes from the top to the bottom of the zone at least twice on both sides, right? So in this case, 1, 2, 1, 2. And about all the different scenarios that can go on in there. And as I've said several times in this room before, when you get into one of these zones, the longer you're in it, the more likely the first move out of the zone is going to be a head fake. That the whole pattern is actually one of the things that ICT took, right? I mean, this was nothing new. I'm not saying good guy, bad guy, or criticizing or anything like that, but one of the this whole zone theory, which has been talked about not by that name, but in a lot of different books and candlestick projects and courses for years. That's one of their key, kind of a failed breakout, and then I was in inverse fair value gap or something like that. I don't remember all the terminology, but that's basically what this is, right? A zone of consolidation. We break out, ideally even strongly break out in one or two candles, and then almost immediately reverse and move back into that zone. So what we would probably like to see is, again, the biggest move could be a continuation out of the zone. So we'd probably want to see what looks like an attempted reversal, which fails. And once you begin to see selling pick up within this like top quad, as it were, it's a fairly likely trade that moves you down to the low of that zone. Again, this is not directly something we use with stack trade. This is just kind of a separate supply. I can talk, guys, I promise. Like a separate support and resistance areas within your structure. Also, apologies if I stutter a little bit or anything this morning, guys. I've had a pounding headache for like the last 24 hours, so I've sort of been like double fisting the Aleve for the last couple of days. So usually doesn't make me loopy or anything, but you see the lights on in the attic and nobody's home for a few seconds. That's probably what's going on. So also with the schedule, Wednesday, I want to do an afternoon session. I know I said I wanted to do a week's notice on that, and then it completely slipped my mind while I was out of town. So Wednesday, I'll see the exact time. Maybe we'll come on about maybe we'll come on about noon or one Central Time and stay for about an hour. Or maybe you know what? Maybe we'll do. I'll set it up so that we'll do like 12:45 to 2 or something like that because I want us to see 2 hourly uh structures roll over. So yeah, we'll pick a time, kind of like how we do this morning where we come on a little before 9 so we can see the 9 o'clock and the 10 o'clock, usually, unless we really need to wait. Uh Hourlies roll over, we'll do that similar thing in the afternoon. I'm not going to do a ton of those right out of the gate, the afternoon ones, because I understand, we have the people that we have in here are kind of like a split between like U.S. East Coast and like Europe West Coast. So I want to try to be friendly to the majority of what's going on in here. But yeah, just an occasional. Again, I encourage you to watch the recording. You can skim this, guys. If you're watching the recordings, I know several of you do. We have several members who can't ever make the live sessions, but watch or at least skim through the recordings or play them back at 3 or 4 times speed. But you can skip ahead to where we see, an actual entry on a chart or things like that. That's one of the reasons I want to at least try in the afternoon. We just haven't been getting a lot of good setups or good entries during this time period. This is obviously, guys, and I've been very upfront. This is all designed to get you trading the system independently of this room. I mean, hope you're always here to, talk and contribute and ask questions, but independence is the key to this, right? And especially because I know there's some of you that can only trade in the afternoon or can only do. That's one of the beauties of this system is that, in theory, it works any of the sessions. It has not been extended. I just disclaimer: it has not been extensively tested outside of the New York session. Um, but the structures in theory will function the same. But within the New York session, I've worked with traders over the years, especially because I worked with when I was an options coach for many years at with TradeStation. And options are a great instrument. And we obviously don't get deep into those here. Maybe I'll put something together at some point on that, but they're a great instrument, and especially if they get to trading outside of the New York hours, which I think they will very, very soon. Because as the stock market starts trading outside those hours, Nasdaq's gonna in December going to start basically a European hours American stock trading session. It'll probably take a few months for volume to build in that, but the options market won't be far behind. And actually, that should increase a ton of volatility within the futures market. So there'll be plenty of things to trade, in the Asian and European sessions, I would imagine at that point. But again, I worked with a lot of options traders who could only trade for an hour a day, right? Which in options is fine. You can always have good till cancel orders for your stops or your profit targets that can sometimes take 2 or 3 days to hit, right? But futures is underrated in that. I always say if you just have 1 hour a day to trade within the New York session, as long as it's the same hour, right? Because if it's a scattered hour, it's going to take you a lot of time to accumulate mastery within those hours. Whereas if you can always do obviously the lunch hour 12 to 1 Eastern isn't the best, but if that's the only one you can do, then stick with that for 6 months and only trade that hour. I worked with a lot of traders that only have a brief amount of time during the day. I worked with a college professor who says I have one 15-minute break or one 30-minute break during the New York trading hours. Can I do this? Now futures I wouldn't recommend that, but I was doing options at the time, and Absolutely, and I worked with him for about 8 months before I got another offer and left that place, and it was he was doing really really well because again he's watching the market at the same time of the day, um, which tend to have similar characteristics. So haven't gotten any new alerts yet. I decided I am going to go in, guys, and um, do these all individually, right? So like on this, I'm going to go through and do set all these up individually because I just want a little more information for the alert, just ES long or NQ short, especially when I'm on stream because it makes it easier for me to look and say, oh, okay, this is something we were anticipating. We want to take the trade, or you know, NQ's down 500 points and the ES is firing off long. We're probably not going to pay much attention to that. Interesting, the huge move out of the gate that just took about 15 minutes, and now it's caught in about a 100-point range. Feels heavy though, guys. Without looking at volume, it does feel like it wants to break to the downside. Which again, I'd love to see it rocket up and poke its head above 40 because there's going to be some buy programs that kick in up here, but then there'll probably be some sell programs a little higher. And again, if we break out about let's say 20-ish points and then retrace, well, our 5-minute ATR is 44. So if we can get about a half ATR, maybe a little above half ATR to the top side, and then break below, I wouldn't again don't enter right at 40 because we could have a break, retest, and go. But you could set your I would set a buy or a sell stop maybe 25. Give it about 25 handles to the upside and play for a move to the bottom of the zone. In fact, if we see that while we're on, guys, I'll take that as a paper trade, not in our stack trade portfolio. But again, I'll be very clear that's not a stack trade, but it'll just be an example of, again, I think as we're seeing in the ES, NQ, YM, etc. We are, last week we didn't get these big moves out of the gate. We sort of consolidated, got a move, and then consolidated for the rest of the day. It was a very, very rough week. So we do get a big move out of the open today, but now we're right back into a chop mess. On the hourly, guys, this is a pretty key candle that we're looking at here. We want it to make up its mind. If it breaks the low of this candle down here at about 950, it could be see tomorrow markets, right? It could very easily be end up being one of those 600 or 700 point down days. Or if this ends up finishing at or near the high, it basically, especially if it fails to sweep out this candle here, sets the table for a little better potential reversal. So this is a very big 1 hour candle that's forming. But again, as Steve Neeson will tell you, one of the biggest mistake candlestick traders make is to not take it, it is not to factor in candle shadows or wicks, etc. But it's also to make analysis, definitive analysis before a candle is closed. I'm going to go get a little more water, guys. I will be back in about 2 minutes. All right, all right, all right. So anybody do anything special this weekend? You just kind of recharge or relax. Nope, sorry guys, I'm reading an email here real quick. Hey, there we go. What do we got? A potential long setup firing off in the GC. Yeah, I don't know about this one. First of all, we'd basically be a little late on our entry. And again, that's the right signal, right? The signal's not valid until the candle closes above the hourly, but we've already taken a few points off the table. So our entry, let's see, 20. The break was at 6. We'll call it 1720. So this is kind of a third of an ATR already. That's tough because then you pretty much have to set about two-thirds or a half ATR as your stop loss. So yeah, if this one's going, it's going without us, guys. Not a horrible pattern on the setup. I mean, this is a nice little support zone. But again, I would feel a little more comfortable if this prior high were a few points higher. Because right, because this is the first place we're going to watch for a potential reversal. Now, if it breaks through there, it's heading up to 35. Yeah, and I would worry about this petering out a little too quickly because again, now it's essentially just forming a lower low or higher low, excuse me, and it's formed a lower low. So again, not a horrible pattern, but there's enough that I don't like. I'm not upset. I missed this one because again, probably would have had to get an entry at about 18, and then you'd be sitting on enough profit up here that you could start to peel off a little bit if you feel that there's a reversal, or at least at the point you broke up above 25, 725, you could slide your stop in at break even. All right. Let's see if we can get this break out of this area here, or at least this zone. Again, and one of the things is like this isn't an exact science, right? Because sometimes we could have 3 or 4 candle wicks above this area. So do we put, drag our zone up there? Like I said, typically when a couple of these match up, we want to you could put this. No, don't want to slide it like that. You could put the low here, but if it's not going that much lower to encompass the candle wicks, that's generally how I'm going to draw it. We didn't get that breakout, at least not yet. This is close enough that, again, kind of forming a double top and pushing below all this support. I'd still tend to consider that if it ran to the bottom here, that'd be a false breakdown. The other thing that complicates this a little bit, guys, the zone of it, is remember we've talked about that pinning action in here before, right? We talk about support and resistance as zones rather than lines, but the other kind of key concept here is an area that we call the chart pins to it, like a pin to a cork board. It can move in a lot of even several hundred points away, but again, it always seems to find its way back there. The joke I always make, it's the toxic X, right? And if you don't have a toxic X, you know somebody who does. That person keeps finding their way back to that person despite any efforts to leave, right? And that's similar here. Now we are getting some pretty good structure in terms of support and resistance, but we're also again sort of pinning to this, so we don't know what the dominant factor is there. I hope I explained that okay. It sounded great in my head. I will say, guys, talk all the time like we don't want to be headline traders, right? Because the headlines are always going to be known to millions before us. So we focus on what we can know in real time, same as everybody else. Price and volume, which make up 90% of the Western style of technical analysis, right? But this, for us, sort of I'll call myself a trading news nerd, right? I'm always interested in how the news affects it, whether it leads to an edge or not. We continue to see this escalation between the U.S. and Canada. Like that was dying down for a while, right? And I have some friends in the hospitality industry in the West Coast and Las Vegas and other areas, and it's really affecting things down here. That Canadians are not visiting or not buying anything American. Now, how percentage of GDP? I mean, we don't. It's going to take some time to kind of really feel the effects. So we don't know worth it, not worth it, whatever. And again, don't let your personal politics bleed into your trading, because I've heard too many morons on both sides of the aisle that have done that over the years that it's cost them a lot of money because they're trading, for or against a president or administration rather than the markets. The minute you take your eye off the ball in the markets, I don't care what it is, you're cooked. You're done. But it is interesting to watch this back and forth with US and Canada. This is something that is completely unique in my lifetime. It's there's always been pissing matches with China going back as long as I can remember. I would say it was probably moving into Clinton's years that I first became like, I was 10 to 12 years old, where you're like aware of what's going on to the point you can, at least somewhat access those memories, or at least remember the mood and sort of the, I can't remember a president in my semi-adult lifetime that has not had a pissing match with China. Russia's been a constant, thorn in everybody's side from time to time as well. But this thing with Canada is very unique, and how obviously President Trump thinks he can really put the screws to him and force him to a great deal. Canada thinks they can stay united. What's interesting, and that I brought that up because I just see, Doug Ford, the premier of Ontario, is really getting lippy and just like he's trying, he's really trying to influence Carney to just like cut everything off. All right, well, let me know how all that works out for you, both sides, right? So it is interesting to see, and the fact that this has come up over the weekend means we're probably looking at a couple of weeks of some more headline risk there. As the Iran headline risk fades, this seems to be coming to the forefront a little bit, and that in the Treasury, Bessent announced they're going to buy back a bunch of bonds, or and I think I've seen pretty compelling arguments that this could work. I've seen compelling arguments it can't work. So, somebody's going to be right or somebody's going to be wrong, right? I've always found that interesting, guys. When I was with TradeStation, they flew us all over to a lot of those money shows and the Traders Expos to speak. And I've been with a couple other companies that have had events there as well. So I've spoken at these events for years, or run tables at these events and all of that. What has really been interesting to me over about the past 10 to 12 years is now every one of these, if you look at the title topics, right? Because it'll, speaker A, how to, and this is all asset classes, right? How to, balance your portfolio to minimize all this kind of crap, right? And what's hilarious is you will see now, for a while it was Trump, then it was Biden, and now it's Trump again, where it's, why President Trump / Biden is saving the stock market and what to invest in, right? And then right below it, like sometimes on the same stage an hour later, why President Trump / Biden is horrible for the markets and will lead us into the next Great Depression, right? Buy my course, buy my book, right? So that stuff always fascinates me. So I don't know. I got a sick brain like that sometimes. That kind of stuff just interests me and fascinates me to see not only the event, but are we getting our false breakout here, guys? One of my dad worked at a university in the athletic department for many, many years, but he, golfed and played racquetball with a bunch of professors there. And there's a brilliant like a damn near world-renowned economics professor there that just retired a few years ago. And so I grew up talking to him a ton about this kind of stuff. And he'll be the first one to say, listen, put 5 economists in a room and you'll get 10 explanations for what's going on, or 15 or whatever, right? It was like for 2 or 3 per person. Short setup on the RTY. Ooh, this could look juicy, guys. This could look juicy. Let's make sure we're all logged into our, I would probably take this in a personal account too. All right. So I would probably try a break of the 15 mid. So I would say let's see. I want to sell stop. Probably go 2 on this. Again, this is for the control paper portfolio, but I'm going to take I would probably take a few micros of this in one of my fundeds. Hold on. All right, so stop loss, I'd put just above the previous hourly low. That's 270, which means I would like to get about 500 profit. Again, your mileage may vary if you're a little heavier sized, and just don't set your stop right at the tick here, right? Either a few ticks below or a few ticks above. Beautiful. That's a nice S3, guys. Especially because we're basically midway between daily daily mid and daily low. So this could actually have some run, guys. If you wanted to take, I'm exiting full size in the control portfolio. And this is, I love our, this is going to sound weird, guys. I love our stop loss in this trade, right? Because look at where we're at. So our entry was 10.6. This is 13.3. So it's very much close to a 1 ATR stop, right? It's also would have to break through the 15 mid, the hourly mid, and actually start to poke towards the previous hourly low. So there's a lot of areas it has to get through. Now it's not that far, right? If you were, it's 1 ATR. If somebody hits buy on a big order, we could swipe halfway there, and the algos will take us the rest of the way. But I know that sounds weird, but the deeper you get into the trading, the more you'll appreciate that, where you have a really juicy stop loss where it's like, all right, if it gets there, you tip your cap to it. It earned it, right? I will say though, so far in the Canada US thing, Trump only goes after Carney. He hasn't gone after this Ford yet, and they operate pretty similar ends of the political spectrum, right? Like they're both considered right wingers, Republican, whatever the Canadian equivalent of that is. They're both very, very boisterous. They both love to push their weight around, so to speak. And but Trump has not engaged with him. He probably thinks it's beneath him because he's not the prime minister. But if those two start going at it, we'll just get the popcorn at that point, because I don't care who you like or don't like or root for or don't root for. That's going to be some prime entertainment at that point. Gonna make us sweat this one out a little bit here. So again, guys, being very strict on this for the control portfolio. But yeah, let's say you're. I mean, I'm 8 micros deep on my personal. Um, I would probably take half off here, and let's see how far the rest can go. Now, if I take the half off and it continues to go, I'll bring my stop basically to where I took the half off. And if it swipes back and takes me, that's fine. I'm okay with that because I based the whole trade on that risk reward, right? But every now and that happens quite a bit, or it goes a couple points more, and you chase the stop up and it peters out. Okay, you're getting just as much, if not more, than you originally set up the trade for. However, every now and then that second half just gets momentum and goes. Um, and again, that's not something you need to happen every trade or even once every 10 times you're in that position. But if it happens about once out of every 10 times, that can be an extra, in a personal account and in a personal brokerage account. Sometimes that can be an extra 3 or 4 grand at the end of the month. All right, what do we got? A short setup on the NQ. Oh, I like this one too, guys. This basically, low of this candle would be my entry. because this is a strong area of resistance here, guys. And if we break below here, it sets up my whole thesis of this being a false breakout and again, if we break then below here, we could get to the bottom of the zone. If it breaks strongly above 29,100, trade goes off. Like I'll pull it. And again, guys, this is why I do always encourage you. And I know what's on screen is the control portfolio, but it's okay to take a couple setups at the same time. Now, I wouldn't go like long ES and short NQ, right? The RTY functions a little bit on its own, but the fact that we're already short the RTY, if we were to get short the NQ, it's sort of a little bit of double exposure. You gotta manage those tight, right? Because they both go against you strongly. Now all of a sudden you're really looking at a red day. But occasionally, especially when things match up across multiple indices, that's worth the risk, because then basically you hit on both those trades, you're done for the day. And that's also why you can give it a little extra confirmation to enter the NQ. Because right now, if the indexes just decide to pop, okay, we're going to lose on that R2Y trade, but that's it. We talk a lot about risk management in this room, obviously trade to trade, but it's also risk management of how you trade and how you protect profits, etc. I will tell you this is not a hard and fast rule, guys. This is more of a guideline. But very often, if I go +2 on the day in terms of trades hitting full PT, I'm okay with that. Like I'm okay shutting down at that point. That I know that we have our system trade limits, no more than 6, et cetera, et cetera. But then anytime you're up +2 and you've gotten an account to the finish line to go from an eval to a fund or take a payout, that feel free to take what you need to take there, guys, which is why we don't necessarily do hard and fast exact rules for our stops and our profit targets. We encourage more the risk to reward ratio. People say risk to reward and then they say 2 to 1. All right, you're risking 2 to make 1. That's not what that means. So try to say reward to risk, but it really doesn't roll off the tongue the same way. All right, so we might be pulling this order here, guys. Again, if it volume surges over the thought process on where I put the limit order at, in terms of the NQ, if you're asking that, yeah, it's just again, I don't want to get into the trade kind of in this little structure here. I mean, this is basically a triple stack: our hourly mid, our daily low, and our 15-minute mid. So getting into it anywhere in here, especially as you see, we're already kind of chopping around, it just adds a little more risk. Whereas sort of breaking below this first candle that started to slow this ascent before the other breakout candle, plus it takes me far enough below 100. I don't think 100 is going to be a pull anymore. Now you can also do like a scale in here. Like I wouldn't do this when I'm in another trade, but let's say I've made no trades on the day, right? And I feel pretty good that we're going to crack down lower, but maybe I'm unsure on the timing. Well, okay, if technically this is a valid setup when we close below the hourly mid. So if you want to grab, hey, I'm going to grab 3 micros there and set up the trade as if that's all you're going to take. Now, you don't DCA down here or up here. I don't ever recommend that. I know some people teach that. I'm not saying they're right or wrong. I'm just saying I never add at a loss. But what you could do then is add 3 more if the trade goes green, right? So yeah, okay, let's pretend this went against us here. It comes down back to our entry, maybe even 2 or 3 ticks below our entry. Then we go in our full size. If 6 is your full size, you can also, if 8 is your full, well, 6 or 8, go in by 2s, because sometimes these trades, dick around 2 or 3 times before they go. Again, I don't go deep into that because that's not really something beginners should do a lot of. But as far as where the limit order is, again, it basically has to get through the hourly mid, the daily low. Now, I acknowledge this could just enter us in chop for a while or reverse right back against us. But this is going to be a really good risk reward, because I'm going to have to put my, bigger trade. I'm going to have to put my stop probably, I don't know about all the way up here, but at least probably right at or a little below 100. But I can probably set my PT below 29K, maybe even further. I mean, again, guys, as recently as a little over a year ago, my regular size in trades was 2 to 3 minis. I can't tell you the last time I've traded multiple minis, even on paper. Did that answer your question there, Dave, by the way? Let me make sure Excellent, sir. Response came through quick. That's I will say, guys, as much as I'm not a fan necessarily of the structure of this live room in Kajabi. And like I said, y'all can't see each other for some reason. I don't know why that is. But the latency is incredible. Like I did I had a buddy like in LA, like check the latency, and even that far, I know it, and I know even overseas it's only a couple of seconds. YouTube is insanely high latency. Even when you go to the very low latency, the minimum you can get, and obviously it depends on how far you are away from a hub and the streamer and all that, but like the lowest latency I've seen is over 10 seconds. Maybe if it's one guy just streaming to 100 people and he's going directly into YouTube, like most of us use software to to stream into YouTube, which then stream. When I was at Tradeify, I was streaming. Our 3 main hosts were from LA, St. Louis, Chicago, St. Louis area, and Sweden. And so we have to each stream into Chicago to the main streaming PC, and then they stream it to or they use another stream to send it to YouTube. We had 30 seconds latency for some people. Now, again, we did break out above 100. Now, I didn't see heavy volume, and the breakout candle got slapped down pretty quickly. So I'm still okay with getting into this trade. But if we get back up above 100 at this point, especially if we break the high of these candles, even if it's not without volume, trade is done at that point. Check on RTY. That's probably moving a little against us. Oh, no. Okay. I spoke too damn soon. As we break below this prior low, I will think about adjusting my stop. Are we at above 1 ATR in terms? Oh, we are. Okay, so we go break even now. So again, guys, in the personal, I'm actually, let me adjust that right now. I've got half off here. And then I'd probably drag my stop for the rest just behind it, right? I don't want to lose the profit on the table, right? Even though it's just a couple $100, but again, if we break through where this prior area of consolidation where our initial PT is, we've got room. I don't know if we go all the way down to 3,000, but we probably have room 03 to 04. All right, so we're pretty much locked in on this particular trade. I will like if we got really close to our PT, I'll drag this halfway there, maybe 2/3 of the way there, just because I'm not going to let it go from 5 ticks away from. If I'm sitting at my screen managing the trade, I'm not going to let it go 3 or 4 ticks away from PT all the way to break even or loss at that point, right? Yeah, we're still hanging in there, guys. We've pretty much stacked a zone on a zone here. We got close to. Did we actually break that though? Let's see. 110, 110.75, 110. No, so technically we didn't break the high. I'm less excited about this potential trade now, though, guys. We've also established enough up here that this really does not count as a false breakout anymore. This is basically a confirmed breakout, even if it craps back out. But it makes it a little more likely that we bounce bullish off the top of this zone, right? Prior resistance becomes support. So what I was thinking was about A- setup is now probably B+ drifting into solid B. And at that point, we don't take B- trades. We don't. Yeah, guys, I'm gonna pull this just because. Again, do I think it could crack below here and accelerate? Well, let's see if it does right now. I do, but at this point, the S3 is it's not quite valid anymore, right? And S3 is supposed to be a pretty quick bounce, right? It's supposed to be more of a basketball, and not a soccer ball. So yeah, I'm gonna go ahead and pull this, guys, 'cause I just don't think it's a valid S3 anymore. We still in this? Oh, it's gonna run a little on us, huh? All right. I want to lock in at least a hundy on this trade. We break below this low here, I'll probably drag the stop down further. I should have been another contract heavy in this trade though, because I'm trying to keep some of the values in the at least as close as I can in the control portfolio. Like I want wins to be between like $800 and $1,100. I want losses between like 500 and 600. If we hit full TP, and I try to not actively manage these trades too much, but when I'm sitting in front of the computer, I'm going to manage them like I'm managing my personal. I'm making the same decisions, at least size wise or initial PT and stop loss wise. Yeah, so the R2Y wants to bounce. It was just a little late on it. Again, still love the setup on this trade, and especially the initial stop loss. I'll take that 10 times out of 10. Again, not a stack trade, guys, but I really like this pattern for a potential, like, just like quick breakout, right? If we were to reverse here, I wouldn't be picky with it, guys. I'd probably get an entry about 112, 113, set a tight stop, right? Like maybe 15 handles. It might stop you out, but again, I think if it cracks through here, if it's going to go, it's going to go. I think if we break through 113, 115, you got room easy to 150. So again, you want to risk 50, even 20 handles to make 40. That could be a 2-to-1 trade there, guys. Again, I'm not going to take in this portfolio because again, not a stack trade, but it goes back to sort of some of the structure and the zone stuff we were talking about. It's one of those that probably has maybe a 40% chance of working, but if it does, it's a 2-to-1, right? Which on 2-to-1, you only need to win 33% of those to be break even, not counting commissions, etc. And again, that's not an exact science. And you know, I always recommend having, whether it's a smaller brokerage account or more likely an eval or funded account, to take like structure plays in if you want to start playing around with that, right? You don't want to have 3 great stack trades in a day, and all of a sudden we take a couple of these structure zone trades and they wipe out half our profit, right? All right, guys. So we'll see how the top of the hour rolls over here in 5 minutes, and we'll look at everything and talk through it. And then, I mean, again, I don't know how this RTY trade is going to turn out, but I think it's been a decent Monday morning, right? Like we haven't gotten a ton of setups, but I think they've been solid. Now, again, this was a really nice S3 setup. It never got to a point we felt comfortable triggering into the trade. Even if it breaks down hard from here, guys, this is what, basically a half-hour consolidation. It's a coin flip at this point without news or catalyst, right? And with stack trade, we always want better than coin flip odds. But this is, if it had bounced here, guys, I was very comfortable with the potential. Let's just go through here where we would have set our, okay, so we had our sell stop here. Stop loss either has to be up here, or I would probably put it a little below, because if it's going to get to above 100, actually, I'd set it a little below 100. Because if it gets to 97, guys, it's going over 100. If it's going over 100, it's probably going up another 10 points. Whether it breaks out from there is anybody's guess, but you could probably set your stop about 5-ish handles below. So 610. So I don't need to get far in this zone, right? I don't even need it to get all the way to 29K, which if it breaks below this, the 2940, it's probably got a pretty good chance of going there. So I really like the setup. I like the risk reward. I'm not comfortable with an entry anywhere in this zone. And that has proven to be, at least thus far, a good plan. Yeah, but you couldn't set it any tighter. This is about as tight as I would set it. And the only reason I would set it this tight is because I got 100 up here. Normally, you'd probably have to be, again, I don't like taking a 4-figure loss on a trade. So I wouldn't set it above this double top, but I would probably set it. I mean, if you want to just put it right at 100, I know we don't normally do that, but, or even maybe 105. Okay, 820 is not an ideal loss, but then again, now we got to slide this down a little more, right? To at least probably we would need a break of 29,000. So it puts us needing a, you guys understand what I'm saying? As much as I've talked in a while, guys. So that's all we're waiting for, guys. Roll over the top of the hour. We'll look at the new structure. and we'll game plan from there. They're gonna make us sweat this damn trade, aren't they? Oh, look how close they got to stopping us out. Watch this for a minute here. I will tell you guys, it's funny, you know. There's nothing more exciting than a nice winning trade early in your career, right? Because they don't happen that often. Um, but I'm at the point in my career, like I'm legit excited when I can go risk off on a trade, right? Either break even, or in this case, it's risk is completely off, barring a swipe beyond swipes, right, or some sort of computer error. We're locked in 100-ish dollars, but just that slide, and that's my endorphin rush. Slide my stop to break even. Because I mean, at that point, guys, you really have resigned yourself to whatever's going to happen is going to happen. Um, and you saw I was perfectly comfortable taking this trade off the screen at that point. I am anyway. The only trades I refuse to take my eyes off of, or at least keep on a monitor, is a live broker, a live trade in my brokerage account, because we're talking real dollars. If something goes wrong, I want to know immediately. But even in funded accounts, guys, set your stop, set your PT. If you need, if you overmanage trades. We got a long setup firing on the NQ, huh? 1S5. We haven't had one of these in a while. So it's basically an hourly bar closing back above the daily. Now, so this would be a big swing trade, guys. Again, I couldn't take it here. I'd have to take it on a breakout. So let's just set this up if you wanted to take it, right? Actually, I'd probably go 120 on this, because this is a big boy trade. This is a long trade. So we put a buy stop here. PT can just be at the daily low, maybe a little above, a little below, depending on how we want to do it. I would even be comfortable with it down here, but then I gotta run my stop up, or my PT, quite a bit, right? Like I'd probably run it up to the hourly high, or at least the prior hourly high. So this is, again, a trade I don't know that has a great chance of being successful, but if it does, cha-ching, right? But I'm not putting this trade on, guys. So especially because we've immediately broken back down below the daily. All right, so let's go through everything here, guys. Stacking up a little here, our hourly and our 15-minute on the ES. That could produce some setups. Again, probably only shorts for me in the indexes. I mean, I need to see a pretty big move and a retracement to get in as we move into the afternoon. So I'm pretty comfortable definitively saying, at least for the next 2 hours, no longs for me in the indexes. Let's see. So yeah, this one's tough, guys, because our hourly mid, we all shifted down here. Okay, so we could be looking, well, we shifted up here, which negates potential S3 shorts. You could still take those, but yeah, guys, there's just nothing, I think, index wise, because we're consolidating so strongly right now. So nothing on the ES I'm interested, nothing on the CL, or the ES or the NQCL. We're right back in the headlines with Canada and Iran, right? GC. Now GC, we're up near the daily high, so we could have some potential. Again, I wasn't nuts about this S3 here. It was valid. Could see another one here. I would not be opposed to that, although you just have to understand we are in a larger zone. RTY. Okay, RTY, we stopped out for we stop out? No, we hit full PT there. All right, good job, team. YM, same way. Nothing that really interests me. So, guys, I will be in and out the rest of the day. I have an eye doctor's appointment. It took me 6 months to get this afternoon, so there'll be a couple hours I'm not around. But otherwise, if you have any questions, make sure to hop in the chat. Be careful today, guys, especially if you caught that RTY trade. Sometimes being up $200 or $300 is as good as it gets 2 hours into the New York session. So, all right, my friends, have a great rest of your day. I will update the Wednesday calendar in a minute, but we're going to do afternoon then. Tomorrow should be as normal. All right, guys. See you tomorrow.